Okay, good afternoon, everyone, and welcome to today's Emerging Technology webinar, Uncovering the Real Trajectory of the Humanoid Robot Market. My name is Mary Ellen Doran. I'm the Vice President of Emerging Tech for AGMA. This meeting is being taped, so for those of you on the live event, please put your questions right into the chat. And for those of you listening on demand, please send any questions to Doran, D-O-R-A-N, @agma.org, and I'll get those answers to you as quickly as possible. This webinar has been made possible by generous donations through our members. Special thanks today to Liber, Vector Companies, Star SU, and Gleason. Today's presenter is Ruben Scriven from Interact Analysis. Ruben is one of the world's leading warehouse automation industry analysts. He's spoken at all the leading industry events and featured in Financial Times, The Wall Street Journal, The Economist, Reuters, and CNBC, along with countless trade publications. Ruben leads the warehouse automation research practice at Interact Analysis, a market intelligence firm focused on supply chain automation technologies. In recent years, his group's research and analysis has expanded into warehouse software, covering the whole tech stack from subsystem control software to execution and management software. Thanks so much, Ruben, for your time today, and I'm going to turn it over to you.
Great. Thank you very much for inviting me to talk here today. So today I'm going to be talking about humanoid robots, investment bubble, or here to stay. It's going to be a really interesting discussion. We're going to start off by starting from the macro perspective and then get into the nitty-gritty of it. As was said at the beginning, if there's any questions, please feel free to put them in the chat. We'll probably get through the slides in about 35 minutes or so, so there'll be plenty of time for Q&A. But of course, if there are any dying questions, then please feel free to put them in ASAP. So what are we going to do today? We are going to quickly discuss who we are. I've been kindly given a 5-minute slot to plug our research, so I'll be doing that at the top, followed by a quick discussion on the macroeconomic landscape and its effect on the warehouse and manufacturing building stock. This will then feed into some of our research around warehouse automation. And then finally, we'll get to the humanoid robots and their role within manufacturing and warehousing and the expected growth over the short to mid term. As you have seen, I'm sure, on LinkedIn and various other platforms, there has been a huge amount of hype around humanoid robots. One large financial institution that we saw has estimated the market size to be $3 billion by 2025. That's this year. It's fair to say that's not correct. Goldman Sachs estimates the market's going to be $38 billion by 2035. Elon Musk said there's going to be 10 times more humanoids than humans over the next couple of decades. So there's a lot of hype around this. And what we're trying to do is discern the truth from the fiction, which we're going to get to today. Before we do so, quick introduction to who we are. So Interact Analysis is a market research firm that focuses on supply chain automation. So spanning from industrial automation, including geared motors and gears, industrial gears, down to warehouse automation, where my particular expertise lies, as well as commercial vehicles as well. So we span all three areas, and there's of course overlap between them all as well. Now, my particular research group that I manage is our warehouse and robotics research group. Now, we started covering this market back in 2017, where we were looking primarily at mobile robots. But pretty quickly on, we realized that in order to understand the mobile robot market, we needed to understand the wider warehouse automation space, which led us to our research on the warehouse automation market as a whole. But then pretty quickly on, we realized that in order to understand the warehouse automation space, we needed to understand the wider trends around the building stock. How many warehouses exist? Who owns those warehouses, where they're located, and so on and so forth. So this led to a very nice stack of research where we start with our industrial building stock research and project out the number of buildings being built. This feeds into our research around warehouse automation. And then subsequently, we also now model all 4 major form factors of robotics as well. So industrial robots, collaborative robots, mobile robots, and now humanoids as well. So, what makes us different? We have about 400 to 500 research discussions each year with vendors such as yourselves to really keep our ear to the ground. And as it pertains to the warehouse automation market, we capture about 75% of the market through surveys and interviews. In other words, we're only estimating about 25% of the market. So, we've got a very, very strong coverage of the market. And our analysts that cover warehouse automation have been growing about 4x over the last 5 years. So we've really been expanding quite significantly in this time period. You'll see some of our clients here. We've developed a very nice virtuous cycle where the majority of system integrators and automation vendors are leveraging our research in the warehouse automation space. And the more companies that are leveraging it, the more participants we get because they're incentivized to participate. The more participants, the better quality the research becomes, and the more clients we get, and the cycle spins that way. It could go in the opposite direction. So if we started producing worse quality research, we would get fewer clients, fewer participants, and so on and so forth. So this gives you an insight into our business model. We are always promoting and incentivizing companies to exchange information with us through discussions, through interviews, through research forums, in exchange for summaries and high-level insights from our research. And this is how our business model is predicated. We're very transparent about that. And then lastly, about 40% of our business is actually customized research. So about 60% is off-the-shelf research, and the remaining 40% is customized. We do strategic guidance, more high-level strategic recommendations. We do exploratory market analyses. If you're launching a new product or entering a new geography, we can do an exploratory market analysis. Market modeling, so taking our research and analysis and converting it into your language so you have a centralized source of truth. Marketing support, like co-branded white papers and webinars, and then also voice of customer research as well. And lastly, the insights that I'm going to be presenting today largely come from our recently published Humanoid Robots 2025 report that was published in March 2025. It's about a 150-page detailed report talking about the potential opportunity for humanoid robots. And I'll go into this in more detail as we go. So marketing plug over, I promise. We'll get into some of the detailed insights now. So I wanted to start by talking about the macro environment as it pertains to warehousing. This is a really nice chart here that shows the year-on-year growth of warehouse construction put in place in the US. As you can see, during the pandemic, there was a big increase at its peak, about nearly 50% year-on-year growth in warehouse construction, followed by a pretty sizable contraction. And this contraction was driven by three things. Firstly, there was an overcapacity built during the pandemic, resulting in an underutilization of the warehousing assets. Secondly, interest rates spiked, which means that there were fewer speculative investments in warehousing. And thirdly, it became much more difficult to predict the future as a result of the volatility of supply chains and inflation and various other macroeconomic factors, which led companies to be more hesitant to invest in warehousing. However, from 2024 onwards, from about April onwards, we started to see an inflection point, and going into 2025, we were in a pretty positive situation. The year-on-year growth, while still negative, was rising, and we assumed that 2025 was going to be a year of correction, or rather a year where we start to see positive growth again in warehouse construction. However, fast forward to today, this data here shows the Global Economic Policy Uncertainty Index. It's a bit of a mouthful, GEPU. And this tracks the economic uncertainty as it appears in news outlets. And as you can see, we are spiking in March, April, and May. Nearly as high, you'll see just below the peak that we had during the pandemic in March 2020. Now, this has muted our expectations of a recovery in 2025. And you can see here our estimated growth into 2025 for the value put in place for warehouse construction. Now, it's difficult to translate warehouse construction into true numbers of warehouse of the number of warehouses. So this translates into this slide here. This shows the number of new warehouses added to the building stock each year in North America. As you can see, in 2021 and 2022, there was a sizable increase in the number of warehouses being built, followed by a very big contraction in 2023. Now, again, we assumed that 2025 would see a slight growth, so about 950. Since we've published our Q2, or rather Q1 2025 warehouse building stock database, which came out at the end of March, we've since muted our growth, and we actually expect another year of slight contraction as it pertains to the net new facilities added to the building stock. But what about factories? Do they present a larger opportunity? Well, to summarize, manufacturing construction is starting to show signs of recovery from a decades-long contraction associated with the offshoring of manufacturing, which I'll get into in a second. There's a few charts here, and I'll go through them one by one. So starting on the left here, this is showing the total number of US manufacturing buildings, the total factory building stock, as published by the US Census Bureau. Now, you can see a peak here in about 1990, 1993, followed by a gradual decline over time. However, if you look on the chart to the right, or the middle one rather, where you look at the number of facilities built each year, which is in effect the derivative of the chart to the left, where you're looking at the number of the net new facilities, you can start to see a bit of a peak here, starting in about 2019. Now, that's contrary to popular belief that the nearshoring trend started as a result of COVID. It was happening slightly before that. It was accelerated by the COVID-19 pandemic, and certainly well before the tariffs came into effect in 2025. Now, this data only goes out to 2022. So let's take a closer look at this. This is that middle chart zoomed in a little bit. So we've got the net new additions to the US building stock for factories showing the year-on-year growth. Now, not only is 2022 the first growth year that we've seen since 2012, it's also the strongest growth that we've seen since 1998. So a really positive sign going into this. Now, this data, as you can see, is only going to 2022. What about 2023, 2024, 2025, and so on and so forth into the future? I'm going to have to leave somewhat of a cliffhanger here. So we are publishing our manufacturing building stock in June this year, next month. And within this, we'll have the latest data and the latest forecasts. I would have showed it here today if we had that data available, but it's not been fully modeled yet, unfortunately. So to highlight here, just going back a slide, we are starting to see a period of growth in 2022. We haven't got the data yet, but we are expecting this to have continued into 2023 and 2024. And going forwards, we do anticipate there to be somewhat of a growth going forwards. Although when we think about the effect of the tariffs, we don't necessarily think the tariffs are going to be the driver of the nearshoring and the reshoring, but rather a continuation of it. So how does this translate into the trends in the warehouse automation market? So this is the global total revenue for fixed warehouse automation. Now, what is fixed warehouse automation? That's warehouse automation that's bolted to the ground. Think conveyor belts, ASRS systems, palletizers, depalletizers. As of 2024 last year, the market size was just under $30 billion, about $28 billion in total. You'll see a big spike during the pandemic where companies like Amazon, they actually doubled their fulfillment capacity in the US between 2019 and 2021. This translated to a huge amount of investments in automation. There were many large greenfield warehouse automation sites as people were building warehouses. And then following the pandemic, as retail sales slowed down, as interest rates spiked, as uncertainty picked up, companies weren't necessarily building new facilities and instead were automating their existing sites. They said, you know what, we are expecting to increase our capacity, but we don't know how much by in the next few years. Let's mitigate the risk by, instead of building a brand new facility, let's try and automate and increase the efficiency of our existing facility. Now, even though we haven't necessarily seen a slowdown in the number of projects, because the types of projects are much smaller, we're not seeing these big $200 million projects anymore. They are these smaller brownfield point solutions. This is what's led to this contraction in 2024 and 2025. However, even though 2026 is relatively flat from a revenue standpoint, we are actually starting to see order intake pick up next year, or at least that's our projection, followed by growth in revenue. Since it takes time for that order intake to convert into revenue, this gets translated into growth in 2027. But let's take a closer look at this. On the left chart here, this is showing order intake indexed to 2018, split by upstream and downstream verticals. Now, what do I mean by upstream and downstream? When we think about the supply chain, upstream would be the manufacturers, the companies building the equipment, and then it flows down that supply chain to eventually get to the retail outlets before it sees the consumer. So the upstream verticals and the manufacturing verticals, we've got durable manufacturing, non-durable manufacturing, food and beverage, and we also consider 3PL as an upstream vertical as well. Now, downstream verticals, this is downstream of the supply chain. We consider grocery, apparel, general merchandise, and parcel in this. Now, what happens when you look at this in more detail? Well, firstly, during the pandemic, we saw a big increase in the downstream verticals, the e-commerce companies, the Amazons of the world, investing significantly in automation, followed by a very, very large contraction as companies, especially in the e-commerce sphere, overbuilt and led to an underutilization of their fulfillment assets. However, when we look at upstream verticals, the manufacturing side of things, this started to pick up a bit more in 2022, 2023, as we started to see more nearshoring, especially in the US, driven by the Inflation Reduction Act, the CHIPS Act. We started to see more manufacturing, especially in the US, but also in Europe as well to a certain extent. Of course, Germany has been struggling, but outside of Germany, we have seen a bit of an uptick in manufacturing, especially in Eastern Europe, as companies have offshored out of Germany or out of China, as well as Chinese companies setting shop in Hungary and Czech Republic. So the manufacturing verticals, these have actually been much stronger relative to the downstream verticals in fixed automation, at least. Now, this is interesting because historically, the downstream verticals have been what's driven the warehouse automation market, the e-commerce companies, the Amazons, the Walmarts, the Targets of the world. But over the last 2 or 3 years, it's been the upstream verticals, the durable manufacturing, food and beverage of the world. These, companies are really driving the automation market at the moment. Now, long term, you can see we're expecting stronger growth in the downstream verticals, but relative to 2018, we still anticipate that the downstream vertical markets would have grown to a lower extent than the upstream vertical markets. Now, if we look at mobile automation, then the trend is slightly different. We see that the downstream verticals are what's driving the growth across the board throughout the entire forecast period. So think about the shelf to person AMRs, the tote to person AMRs like High Robotics, the person to goods like Locus, sortation AMRs like Tompkins Robotics. These are really in the downstream vertical markets, and these are what's driving the growth. Now, of course, we are seeing more material movement, AMRs and AGVs growing, and you can see that the upstream verticals, even though they're growing at a slower rate than downstream verticals, they're faster. The upstream verticals for mobile automation exceeds both the upstream and downstream verticals for fixed automation. So when you compare that, you can see it's still growing at a very fast rate, but not as fast as the downstream mobile robot segment. Now, when you overlay them together, you see an extended trend similar to what we see for fixed automation, where you get the big spike in downstream, followed by a big contraction and then growth. Now, towards the end of the forecast, that's really when the mobile automation starts to account for a bigger share of that market, and as a result, intersects the line of upstream. So, what everyone's been waiting for. Now that we've spoken about the macroeconomic environment, we've spoken about how this translates to warehouse automation more broadly, let's jump into the humanoid robots. So we saw a huge amount of investment in 2024 as well as this year as well. Some very large funding rounds driven by Figure AI. Agility had a big raise recently as well. This is the funding in 2024. There have since been some additional funding in 2025 as well. So you might ask, are all of these investors getting it wrong if we're not anticipating huge uptake in the short term? Well, one thing I would like to remind people of is think about the grocery apps that we saw during the pandemic. They raised more than $5 billion. The Getirs of the world, the Gorillas, the Bikes, the Fridge No Mores of the world. And the majority of these are now either bankrupt or operating at a fraction of their capacity. So I don't want people to think that the amount of funding in a particular market is indicative of the future growth. That being said, there is a huge potential in this market, which is why we're seeing so much funding here. So before we jump into the specific numbers, I want to kind of walk you through what our three main scenarios are. We've got a baseline scenario, a pessimistic scenario, and an optimistic scenario. And the way we've thought about this market, and let me actually just spend 3 minutes or so just quickly talking to you about how we arrived at these numbers and therefore the scenarios as well. So we've done what we call a penetration analysis here. What we've done is we've gone through every government statistics agency across different countries and collected the number of full-time equivalent employees there are across different workflows. In the US, for example, there's approximately 1,000 different types of workflows within manufacturing itself. Now, a lot of these are workflows that aren't replaceable with a humanoid. Think about a architect or a sales representative or an engineer for that matter. In many cases, the majority of the uh, employees within, say, manufacturing or within warehousing or whatever it might be, are actually not substitutable with humanoids. In fact, of the 15 million employees in the US in manufacturing, our analysis suggests when we've gone through each of those individual workflows individually, we've calculated that only 27% of those 15 million are substitutable with humanoid robots. So in other words, what we're doing is we're calculating what that total addressable market is. So we're finding what is the total number of employees across different workflows, across different sectors, within different countries that can potentially be substitutable with humanoid robots. So once we have that theoretical max, then we can say, okay, well, we know what that total could be. What proportion of that total could be displaced with humanoids? So to do that, we've come up with two approaches. On the one hand, we have built an ROI model. Now, in many cases, there is an ROI already. The unit economics stacks up. However, there are many, many barriers to adoption that need to be overcome before we start to see the unit economics play out as you would in a rational economic model. So these barriers are regulation, dexterity and productivity, pricing, embodied AI, and form factor choice. So from a regulatory standpoint, it's important to ask who's going to insure these humanoid robots, and what is the risk that these underwriters are assuming for this? Now, right now, it's too early to tell. And given the fact there's no test data and historic data, companies like FM Global and Lloyd's of London, they're not going to insure humanoid robots yet. In fact, Amazon got around this by operating robots without insurance. So that's the way that they got around this, but not other companies can do that. There will be standards created here. Companies like Aaron Pranther, I believe, was on this call, one of the webinars a few weeks ago. Him and his team are developing really fantastic standards, which will drive this progression going forwards around standardization and around standards and the regulatory framework. But until they're there, until we start to see companies like CE and other standard bodies certifying these robots, we will be in a situation where insurance providers are not going to want to touch these humanoid robots. So the regulatory framework, both hard regulations and soft regulations, will be the main limiting factor in the short to midterm. Now, we assume that it will take approximately 5 years for there to be robust standards for industrial settings, and between 5 and 10 years for there to be robust standards in household and service settings. In our more optimistic scenario, we assume that there will be standards within 5 years for both industrial and service and household applications, although we think our optimistic scenario is less likely, of course. And then our pessimistic scenario assumes that it will take longer than 5 years to get those standards created for industrial and service-related roles. Now, the second barrier is dexterity and productivity. Now, on the one hand, you can assume that over time, as AI and as robotics gets better, the dexterity will increase. And that's a fair assumption to make. And of course, over time, that will be the case. But will the regulations limit the productivity? Think about the ISO 15066, which is talking about the collaborative operation of humans and collaborative robots. That necessitates the robots to operate at a very slow speed in order to avoid any accident. You can imagine if there is standards and regulations put in place, they might regulate that humanoids need to operate at a lower speed in order to operate collaboratively with humans, which might limit productivity improvements. So many assume that humanoids can become as productive as humans in the next 5 to 10 years. Well, we assume that they will get about 50% productive as humans over the next 5 to 10 years, or by 2032 rather. But we also assume that there will be a limit on productivity and they won't reach 100% because of the regulations in place that will limit the speed at which humanoids can operate in collaboration with humans. From a pricing perspective, we assume there will be about a 50% decline in pricing by 2032. If we are more pessimistic, we think that drop will only be 30%. And if we're more optimistic, we assume that it will get to as much as 70% by 2032. Embodied AI is another factor. We've spoken to a myriad humanoid robot companies as part of our research. And one thing we hear soon is that embodied AI is going to have its ChatGPT moment soon. Now, we're actually relatively optimistic about this. We do think that large embodied AI models are getting better. But when we hear that term, we're going to have our ChatGPT moment soon. In our mind, that indicates we're not there yet, but we will hopefully be there soon. And that doesn't instill much confidence in my mind. So we are relatively optimistic, but it's clear that many of the companies who are doing this aren't 100% sure about when that future will be in terms of getting that true kind of embodied AI model to be, again, as productive as a human. In fact, some of the companies that we've spoken to have said that some of their competitors, and again, this might just be bad mouthing, and we're not going to be naming any names here, but they've said, oh, well, competitor A and competitor B actually, their model only operates 10% of their operations, and the remaining 90% is teleoperated or run through programmed logic. So there clearly is a bit of a tit for tat across these humanoid companies as to how good their models are and to what extent their models are actually operating the humanoids. And then lastly, and probably one of the most profound, is the form factor choice. So if you're trying to get from point A to point B in a car, you're not going to get a humanoid robot to learn how to handle a stick shift car, are you? You're going to have an autonomous vehicle. In the same way, when you think about other workflows, in some cases, it doesn't make sense to have a humanoid. Perhaps it makes more sense to have a task-specific robot. So the benefit of a humanoid robot is you can essentially kind of match a single form factor across multiple workflows and deploy many of these exact same humanoids to do many different workflows. And that, of course, has its benefits, but perhaps in certain situations, a task-specific robot might be more beneficial, and perhaps having multiple different task-specific robots might be the better solution. So our baseline assumption assumes there's going to be a combination of humanoids and other task-specific robots used for AI-enabled robots. But our optimistic scenario assumes that generalized humanoids are the preferred form factor for all AI-enabled robots, whereas our pessimistic scenario assumes that task-specific form factors will be the preferred AI-enabled robot form factor. So I know I've gone on a lot about this, but I think it's important to set the scene before jumping into the data. So this is our projection for humanoid robots. By 2032, in our baseline assumption, we are assuming 40,000 units shipped annually, representing just over $2 billion in revenue. And that's just for the robot itself. Now, whilst that might seem a lot, I'm actually going to jump ahead and show you this chart here. Now, this looks at industrial robots, mobile robots, collaborative robots, and humanoid robots, all in the same chart. And you can see humanoids are a small blip there in the grand scheme of things. Now, that's not to say in the future it will become a bigger share. We, of course, do think that it will become a bigger share for sure. But in the short to midterm, it will be a small slither in an otherwise larger pie of robots. So I jumped ahead here. You can see in our optimistic scenario, we assume that there's going to be approximately 160,000 units shipped annually by 2032. But in our pessimistic scenario, this is only about 8,000 units shipped annually. So as part of our research, as I mentioned, we are looking at the total addressable market, so the total number of employees across different workflows. And there are 16 workflows that we modeled as part of this. And you can see the different applications there on the left, the different workflows. Now, what we've done, and again, our model is a lot more detailed, but just as a simple way of visualizing this, we've qualitatively ranked these different workflows based on their repeatability and based on the dexterity required. And in effect, the more repeatable the task is and the less dexterity required, the more suitable a particular workflow will be for humanoid robots. So we've developed the suitability score. Now, this is a rough analysis. This doesn't correspond to our detailed analysis that we've done where we've looked at the ROI, but it's a very good way of summarizing this. What does capture our more detailed ROI analysis is the column to the right. Now, this is showing what proportion of that TAM, that total addressable market, is expected to be penetrated by 2032. So you can see warehousing material movement, we expect to have the highest penetration by a considerable margin, about 3% penetrated. Overall, when you look at all different workflows, we're expecting 0.01% penetration. So a very, very small penetration overall. But when we look at warehousing, that's where we see the highest penetration, followed by manufacturing and then housekeeping at the bottom with 0.01, which also represents the largest TAM. So what I've done here is I've removed the columns which show the dollar value and the unit shipped by workflow. We've got to have some incentive for you to purchase this research, but nonetheless, I want to present some of the key findings here, which looks at the different workflows and their suitability for humanoids. Now, what's really important is to think about the market from a regional standpoint. So by 2032, we anticipate that about just under 75% of total deployments, or rather annual shipments, will be in China. As I mentioned before, the biggest barrier is the regulatory framework. But we've also seen that without a national robotics policy, it's difficult for there to be a unified subsidy policy put in place for robots. Now, China is looking to be the world leader in humanoid robots and is subsidizing and providing incentives that's aligned to that goal, as well as the fact that they've got a more relaxed regulatory framework. This means that China will be a much more suitable and conducive market for deploying humanoids again in the short to midterm through to 2032. The US will be the second biggest market, but as you can imagine, given the fact that the rest of the world is only about 25%, just over 25%, it is a lot smaller than the China market is going to be, both from a revenue and a unit shipment standpoint. And then lastly, I know I jumped ahead. I was too excited. I want to get to this slide early, but I wanted to finish off with this slide here. This is a really, really nice slide. And actually, we're the only research firm in the world that is modeling all four form factors, where you can look at industrial robots, mobile robots, collaborative robots, and humanoid robots in the same chart. From my understanding, this is the first time this chart has ever been built by anyone. I can't vouch for that, but I'm pretty confident. So I'm really, really happy with this chart. I think it provides a really nice summary of where the market is going. Now, a lot of people think industrial robots are going to be disrupted by humanoids. They are going to get disrupted, but more so by mobile robots and collaborative robots in the short term. Now, given that collaborative robots are primarily still 6-axis fixed robots, it's mobile automation that will probably be the biggest disruptor in the short to midterm, followed by humanoids in the long term. Now, that being said, whilst you've probably gathered that I'm somewhat pessimistic in this market in comparison to many of the other financial institutions, there is still a very large opportunity for component vendors. Now, given the fact that there are approximately 30 motors per humanoid, if we look at the installed base for motors, by 2032, this is going to be an installed base of just under 1 point or just over 1.8 million motors. So even though we're relatively bearish on the short to mid-term for humanoids, there still is a large opportunity for component vendors. And as I said lastly in the last slide, I think this is now lastly, I wanted to go through some of the key design trends as it pertains to different components. Now, I will put my hand up straight away and say that I'm not too familiar with industrial automation components. So if you have questions on these particular topics here, I would encourage you to send them in and I will send them to the relevant person within our organization and get back to you. But I will let you have a quick read through this where we look at the design trends. So rotary actuators, it's really kind of highly integrated drive, encoder, motor drive, and gearboxes, all in a single actuator. They need to be small and light, both from a regulatory standpoint as well as a operational standpoint, and then a very, very high torque density as well. And this slide will be, or this deck will be sent out to members as well, I believe. Correct me if I'm wrong, Mary Ellen. But if you wanted to spend more time looking through this particular slide, then it will be sent out. So to summarize, uncertainty is likely going to cause a slowdown in warehouse construction. Manufacturing establishments are on the rise, but for how long? And this is a slight plug with our manufacturing building stock database, which is going to be published next month. Warehouse automation investments took a pretty big hit after COVID, but investments are starting to pick up, especially in upstream verticals now. Humanoid robot vendors have raised billions of dollars in recent years, but that shouldn't be thought of as a predictor for future success, as the e-commerce or online grocery delivery apps were a testament of. Whilst there is a large opportunity for humanoid robots, in fact, about $2 trillion opportunity for humanoid robots, we anticipate a relatively slow adoption in the short to midterm, at least through to 2032, due to the major barriers. China is expected to account for the lion's share of deployments through to 2032. And whilst we anticipate relatively modest uptake in general, this still presents a very large opportunity for components. So with that in mind, I would love to open it up to questions. We've got about 22 minutes left, and more than happy to answer any questions that people have. I can see there's 2 questions in here. Oh, the comments from Mariella. Any questions from anyone?
So if you have a question, you can unmute yourself and go ahead and ask. And I'll give you a second because I have a couple. So Ruben, can we talk for a second about right now in the marketplace, what I'm seeing is the discussion of one up, one plugged in, and one being worked on it as a rule for how humanoids will be deployed into warehouses because of the battery packs and the AC versus DC. They're not plugged into the ground. So you'll have one that's running for 4 to 5 hours, you'll have one that's plugged in, and you'll have one that's being programmed. Are you seeing that as part of the data that you're pulling in for the figures we've seen so far?
Yeah, I mean, it's factored into our ROI analysis. There are developments over time with batteries. So, for example, some of them are trying to use opportunity charging, where there can be fast charging in some senses, or in some cases,
Yes.
rather. But in general, we'll probably see a one-on, one-off for the short to midterm, at least, as we see, in the process of getting those more developments in the battery technology. But I think the ideal situation is more of an opportunity charge model. And that's kind of the direction of travel for innovation.
Yes.
But until we get there, yes, it will be a one-on, one-off model.
And because this market is so new, are you even able to calculate when the breaks will be for the pricing? And, just like cars, the more cars you can build on a line, the lower the price per is. For humanoids, this will be really important. And have you worked out yet this early into the mix, the price points where as you manufacture, you get lower and lower pricing? Or is that still amorphous because we're so early on?
Yeah, I mean, we've kind of assumed similar learning curves as what we've done for industrial robots, mobile robots, so that there are kind of assumptions baked into how quickly they will go down in cost as in relation to the number of deployments there are. You're right. It's too early to tell whether those learning curves are correct or not. We'll need more data to make sure that we can, assess the data and see how that correlates with our assumptions. Um, that being said, our assumptions are that it's going to remain relatively high cost for the short to midterm. You can see, Elon Musk and various other spectators in the market are saying it's going to come down by about 80% over the next 5 to 10 years. We're a lot more bearish from a pricing standpoint, and we think it's going to take more time for prices to come down considerably. So we're probably slightly on the more bearish side of that argument.
Thank you for that. Eric, I saw you unmute yourself. Do you have a question?
Yeah. Did I hear you say that kind of the smallest market demand was going to be in home, like home use or home care, and you're going to see most of it in industrial?
It's a great question. So household humanoids presents the biggest opportunity, but the smallest market size in the short to midterm. Um, so by far, it will be the biggest opportunity for humanoids, given how many houses there are, how many households there are. It's the holy grail, and it's what many humanoid robot companies are trying to drive towards. But for there to be approved vendors to sell into household applications, it's going to be a huge regulatory challenge for that. So we anticipate, at least in the short to midterm through to 2032, there'll be very, very few deployments in household settings.
Thank you.
I have a question, similar to that table you had about the suitability factor between like warehouses and manufacturing, and I think warehouses were higher, yeah, across versus manufacturing on most things. But was that typically because you thought the tasks were more suited within warehouses versus manufacturing, or less complexity of the environment, or what was driving that?
It's a number of factors. So like sort of we said here, it's task repeatability and dexterity. So from a dexterity standpoint, what we're trying to do is think about what is the uniformity of the products being handled. So in many cases, there is a very, very uniform product mix. Of course, that's also the case in manufacturing as well. But when we think about the manufacturing settings, there is more workflows than in warehousing in general, right? So there are more steps in the manufacturing process than there are in warehousing. So if you're trying to train a model in warehousing, there are essentially fewer steps in that process for the model to learn. So it in effect becomes easier to deploy, which is what really kind of drives up that suitability factor.
Okay, thank you.
Good evening from Germany. I was about 5 weeks ago last time in China, and someone told me there who is working actually on development of ball screws for these for the joints, the finger joints of robots, that BYD is planning to launch a robot next year with a price tag of approximately 20,000 euros. Is that something you can envision, that the cost per unit per humanoid robot is something in that range all over, and your the decrease in price that you anticipated starts from that level, or did you have different data to start from?
So I think there will be definitely variations in the price by region. So in China, for sure, the pricing will be lower, and we're assuming the price is starting from a lower starting point in China than it is, say, in the US and in Europe. There will, of course, be companies that are able to sell products at a lower price point than cost in some cases, right? So if you have, for example, BYD, who potentially are looking to launch a humanoid robot, there might be some synergy there between their cars and the humanoids, there might be some ability for them to sell that at a lower cost of price if there's some additional services they can generate revenue from after the fact. So that doesn't surprise me, but I suspect that that will be lower than what cost is for the humanoids.
Thank you.
And just to add a little bit of color to that, I was at the Boston Robotics show last week, and the humanoids now are estimated one-offs for prototypes in the 130, 140. And they're going down from there. So the 50% and the 50%, they're hoping to get down to the 30,000 point when you get up over 100,000 units. Are some of the numbers that were presented publicly last week.
Great. Any other questions?
I just one more. When you talked about some of the, different types of actuators, roller screws or ball screws and harmonic drives versus planetaries, do you expect to ever get into the detailed forecasts for some of those components, or will you stay at kind of the general humanoid level?
There are detailed component forecasts here. So this report was a co-publication with myself, who is kind of more on the macro side of things, and then my colleague, who is more on the detailed component side of things. So whilst I'm presenting things at a fairly high level, within the report itself, there is a lot more detailed projections on the component level that deals with the trends that we're seeing as it pertains to these different components.
Okay, thanks.
And Ruben, you said that this will be available later for us or be distributed?
So it's a paid for report, but we can certainly distribute the brochure so you can have a look through that and see whether or not it kind of answers the questions that you're trying to answer.
Okay, great.
Do we have more questions?
If there are any other questions that do pop up after the webinar, then by all means, please feel free to either reach out to myself directly or via Mary Ellen, who can then point those questions to me.
Terrific. Thank you so much, Ruben, for your presentation today. Along these lines, this presentation was brought to you out of the AGMA Robotics Committee. The Robotics Committee is free to join. We are having high-level discussions on the component pieces that go into these robots and some of the high-level problems like backlash that need to be solved in order for some of these to get into homes and really proliferate into our everyday. So if you have any interest in joining the committee, please send me an email. But Ruben, again, thank you so much for all this great information. We'll send your slide deck out to all attendees. And if they have any questions, they can reach out directly. So thank you so much for your time, and everyone have a great rest of your day.
Thanks very much, everyone.
Thank you. Thanks, Ruben.